All right, today we're going to talk about different kinds of bank accounts and why we use them. Have you ever noticed your mom or dad having to run to the bank? They do direct deposit. That is where their check from their work goes directly into the account of their choice. Maybe they need to pull some money out and deposit in another bank account. Uh, every couple weeks, they have to whip out the checkbook because certain charities, if you want to pay them, like say tithing, you have to cut a check for fast offerings. They don't accept credit cards yet or debit cards. Um, have you ever wondered why there's checking accounts, why there's savings accounts? What exactly do they do? We've talked about stocks and how with stocks you never ever invest money that you can't afford to lose. You know, if that's your mortgage payment or your rent or your car payment, don't put it into stocks. Well, there's accounts at the bank that work kind of the same way called CDs. In fact, let's start talking about that real fast. Just pull open the other screen here to make sure I have it all correctly. So a CD, you've heard of that. You think, well, is it like a DVD or a Blu-ray? And the answer is no. A CD is actually a certificate of deposit. Now, certificates of deposits or CDs allow you to invest your money at a set interest rate for a preset amount of time. CDs often have higher interest rates than traditional savings accounts because of the simple fact that the money you're investing is tied up for that set amount of time. Now, these can vary from a couple months to a couple years. Please remember that the money you put into a CD at a bank, you understand how long it has to be there and the interest you're going to receive in return, because you can't get that money out. Because if you do, those are called early withdrawals, and there are oftentimes financial penalties for doing that. Another account that will make you higher interest is called a money market account. Now, money market accounts are similar to a savings account, but they require you to maintain a higher balance to avoid a monthly fee. Where savings accounts usually have a fixed interest rate, these accounts have rates that vary regularly based on the money markets. Money market accounts can have tiered interest rates, providing more favorable rates based on higher balances. So if you have thousands in there, you're more than likely going to earn more interest, as opposed to if you only have hundreds, you're going to have less. Now, some money market accounts also allow you to write checks against your funds, but that's kind of on a more limited basis, so that's something you'd have to check with your banker. Another one, let's go back to the very typical, the ones we started talking about, checking account. Now, checking account offers easy access to your money for your daily transactional needs and helps keep your cash secure inside of a bank. You know, the last thing you want is to have that cash under a mattress or in a piggy bank where it does you no good. It just sits there. Customers, you can use a debit card or checks to make your purchases or pay your bills. Oftentimes, you can also go online and pay your bills from there as well using your checking account. Now, accounts may have different options or packages to help waive certain monthly fees. So in order to determine the most economical choice, you need to compare the benefits from Bank A to Bank B to Credit Union C and Credit Union D to make sure you're not paying high fees or exorbitant amounts and you're getting the best interest rate return when using that checking account. Savings accounts, they allow you to accumulate interest, typically a higher amount of interest than a checking account that you can save for future needs. My kids love this. We set up savings accounts for all of my children because A, I want them to save. There's things they want to go on, missions, houses, future cars, things like that they need to save their money for. So a savings account, the interest rates, they can be compounded daily, weekly, monthly, or even yearly. Savings accounts can vary by monthly service fees, interest rates, methods used to calculate the interest, and minimum opening deposit. These are all things that you need to talk with your banker about before you open one up. Once again, I highly recommend there's enough options out there that you shouldn't have to pay monthly fees when opening these types of accounts. This brings me to our last account, which is called an IRA. It's actually an individual retirement account. Now, IRAs or individual retirement accounts allow you to save independently for your retirement. These plans are useful if your employer doesn't offer retirement benefits or you want to save more than your employer-sponsored plans allows. Like with my employees, we do what's called a 401k. And for every percent they put in, I match up to a certain amount. That's free money for my employees. So look into that as well when you're getting your job. Now, the IRAs come in two different kinds of accounts. You have the traditional IRA and a Roth IRA. The Roth IRA is popular because the funds can be withdrawn tax-free in many situations. Not all, but in many. Others prefer traditional IRAs because these contributions are tax deductible. Both accounts have contribution limits, so you can't put in everything, and other requirements you may need to discuss with your tax advisor. Like with anything, you need to make sure that you talk with an accountant, you talk with a tax advisor, talk with your parents, make sure that what you're doing is in accordance with what you want in return. Just like life in many different instances, whatever your actions are, that will be the fruit you get out of it, right? You ever heard that saying, by their fruit shall you know them? Makes sense now? If one bank is only offering you 1% return a year and another bank is offering you 5% return a year, which one sounds better? Look deeper. Does one charge you fees for the checks or not? These are the things you need to be doing. Just like in life, you guys right now are probably interested in video games. In fact, a lot of people my age still play video games in great demand. It's billions and billions of dollars industry in the video games right now. So you know how you invest time into the video games. You're on the couch, you're playing, or you're on your iPhone or your Android. And as you're doing it, you have to perform so many things to be able to get the next thing. There's a game right now that's really popular. My son plays it. It's called Clash of Clans. And he loves it. You have to build armies, you have to build defenses, you have to upgrade your buildings. In order to do any of that, you have to save your money. Now, for the sake of this class, we're going to say that Clash of Clans has a bank called Clash Bank, and the investors are the clans. So as you're earning your money and your elixir, you put it in there, and once you've saved so much up, well, the amazing part is then you're able to take that and upgrade your items. Now, here's what I'm going to ask you. If you're able to do that, if you can save up fake money, how is that any different than saving up real money? It isn't, is it? So lay out a plan, right? Except in this case, you don't want to upgrade your barbarians. You want to buy a new gaming system, which is perfectly fine, but save for it. While you're saving, put it into a savings account so you get that interest. You're getting free money. You'd be crazy not to do that. Don't put your money into a piggy bank. Don't put your money underneath your mattress. Although it may be safe at night when you sleep there, it's doing you no good. So put the money in. There's another video that's going to be talking about what you need to do in order for your homework. Please make sure you watch that. Until next time.